Good afternoon, Clive. Um, Now, On the Market launched into a UK portal market that was dominated by Rightmove and Zoopla. How does its proposition differ from theirs?
Good afternoon, Fiona. I think actually, we're different in a number of ways, but primarily because we were set up to be different, launched to be different. The premise behind the launch was to introduce competition into the UK portal space and to do that through both sustainably fair pricing for agents, but also, of course, a premier search service for consumers and property-seeking consumers. So we were founded by agents and founded for agents. And agent ownership is still very key for us. So one of the biggest differentiators is that we have in excess of 3,000 agent shareholders. Between them, they have over 6,000 branches, and they still own around 65% of the company now. So obviously, we've got extremely common interests with a large part of the agency community. On top of that ownership, we've got authority to issue 32 million new shares to agents signing up to new revenue-paying contracts, and that will enable us to deepen and strengthen those ties further, but of course, at the same time, grow our revenues. We do also have some differentiating advantages that the agents themselves provide for us. One of the key ones there is our new and exclusive offering, which I think you're familiar with, but effectively what that means is agents uploading some of their new listings will do so onto On the Market 24 hours or more before either Zoopla or Rightmove. And as part of our marketing proposition, that helps us to attract the most serious property seekers, the most serious consumers to our market, to our portal. And through that, we can provide high quality leads to agent customers. Other areas of differentiation. Since 2018, we've had an agreement with Facebook Marketplace. So all our agent sales and lettings properties are displayed on Facebook Marketplace, and that obviously just increases the exposure for our customers for their properties. So I think all those give us a rather unique position to leverage the differentiation to increase our paying customer base, to grow our market share, and that obviously benefits our customers, but also could add significant value to all our shareholders. I think probably also I'd like to say above that, we are looking to provide additional value. So over and above the listing service, recently we announced we have made an investment into a business called Glanty. The main product initially there is an online 24/7 automated lettings platform, which brings lots of efficiency savings to agents in the lettings business. And perhaps with the COVID crisis bringing into play even more the ability to do things automated, remotely, etc. I think there's lots of potential for that and similar sorts of offerings. So I think that's very much where we see ourselves heading. We have the potential for a very strong portal based on sustainably low and fair listing fees, which in itself will be a valuable business. But I think is even more than that, is a platform for delivering tech-enabled products to our customers that will help support and provide value to them.
We'd also then like to know what level of market penetration has the group been able to achieve?
I think it's undoubtedly the case that we are firmly established as a leading market portal, whether you look at that by agents or traffic. In terms of advertisers, we are around 13,500 now, of which around 12,500 are agent branches. That is roughly 2/3 of the UK market, so a pretty sizable share of market now. But actually within that, our core strength, the heart of our model has very much been the independent agents. They are the majority of the agency market, and we will be even stronger within that grouping. The new homes developers has been an area of rapid growth for us. As I say, we're around 1,000 advertisers now, but that only started for us last September. So that's grown strongly and an area where we continue to focus for future growth. If you look at the other side of the network, if you look at traffic and visitors, in January of this year, we had our record month. We had in excess of 30 million visits, and that produced 126 leads on average per advertiser. And I think that's a very important indicator, a very strong indicator that we are engaging with the property-seeking consumer, the active person looking to buy, sell, rent, let, because ultimately they are what provide valuable leads back to our customer base. The COVID crisis has unsurprisingly, had an impact on recent weeks. So, traffic at the moment is, of course, lower than it was. But actually, what we've seen there is there were a couple of weeks around the lockdown itself where traffic, leads, visits were much, much lower. But they have actually rebounded quite strongly in the last couple of weeks or so. Not to the levels we saw immediately pre the crisis, but nevertheless, actually a strong rebound. And the sort of traffic we're getting now seems to be that more engaged consumer, because we're seeing greater time on site, we're seeing more page visits per visit, more properties viewed, etc. So I think actually, for the COVID crisis had put a pause for a couple of weeks, and clearly restrictions the government has in place makes it difficult to transact in the same way. But I think actually the engagement with the portal is indicating there is still a strong desire amongst consumers to transact, to rent, buy, let, etc. And that is building up nicely. And hopefully when measures start to be relaxed, we'll see the benefit of that for our customers. If I look beyond the COVID crisis, what we saw, 2019 was a difficult year for agents. But actually the beginning of this year, pre-COVID, we saw some quite encouraging signs. And I think, we, like a lot of other people, think that the market fundamentals remain strong. And in the medium term, that should lead to better markets for customers, be they new homes developers or agents. So actually, I think the fundamentals are there. Our growth strategy is very much around, further serving our customers, engaging with them to capitalise on that. But fundamentally, I think the market's remains sound.
You have two groups of shareholders: the agency shareholders and external shareholders. How do you balance the interests of the two?
That's a question I'm often asked. Actually, I don't see it as particularly a need for balance. As a director, I'm a shareholder. I think that to have a leading portal that's fairly priced, that works for agents and is supported by them, is a key way of creating long-term value for all shareholders. And for that reason, I think actually the interests are very much aligned. I think we have a unique position in that we have the agent shareholder base that others don't. But actually, that just means agents are invested in the success of their own portal, which for us, I think is a very strong factor. Ultimately, our business model relies on network effects, and what we're really seeing here is the same thing with agent ownership, in that really it's a win-win situation as we see it. So it's a question I'm often asked, but I think actually there's a lot of alignment between the two groups.
The COVID-19 situation has impacted your clients heavily. How has OnTheMarket adapted its offering and the support that it gives to its agency customers?
Yes, well, I think probably first and foremost, I'd say that our concern has obviously been for our staff welfare, and I'm very grateful to them actually for their dedication, commitment, the professionalism they've shown in these challenging times. But alongside that, we wanted to do everything that we could and everything that we possibly could for our agent customers. The government measures have had a very profound impact on the agency new homes markets. And we wanted to do what we could to support them through these times. So for our full tariff paying customers, we introduced a 33% discount, which applies for 3 months. So that's April, May, and June, 33% discount off their fees. But actually for other agents, we've looked at a range of things where there are the opportunity for discounted rates, deferred payment starts to get them through these initially difficult times. I think, we want to increase our agent shareholder base, as we touched on earlier. So some of those recent offers are also ones that include, alongside discounts, share offerings. So they're quite flexible. We've found very much that there isn't a one-size-fits-all offer for agents. Agents are all unique individual businesses. They all have their own preferences. So our recent offers, an agent can choose whether they wish to be on multiple portals, on only a couple of portals, or even exclusively with us as a portal. That is up to them. But we would reward them differently with discounts and the amounts of shares they might get depending on the choices they made. But ultimately, as I say, at the heart of this is to provide choice to agents so that they can select a contract that they think is in their best interest individually. Those contracts also have caps on annual fee rises. Again, an important part of our commitment to agents. We aren't here to see unreasonable fee increases. once we've got people onto contracts. There is a commitment from them in return. They do have to qualify for the share-based contracts, they do have to commit to a year of paying a full tariff rate, even if that is deferred, to get them through these current challenging months. We've actually we launched 2 of those contracts, 2 new ones last week, and we've seen very encouraging take up. Actually, it's only been a week, and very pleased with the results we've had so far.
What financial resources does the group have available to help it trade through this time?
Yeah, we've actually made a couple of announcements on this recently. I mean, people are aware we don't have hugely deep pockets, but actually, we think we've taken appropriate measures to do what we need to do. Primarily, we've looked to conserve our own cash so that we can use that both to weather the crisis ourselves, but also so that we can offer these support packages to our customers. And therefore, together with them, we'll be ready to resume and pick up once the immediate crisis ends. We announced a short while ago that at the end of March, we had £8.5 million of cash with no borrowings, and we announced a number of mitigating actions to reduce our costs. And between them, that should allow us to conserve the cash we have to facilitate us doing the agent support measures I touched on earlier, but also the aim being to keep our costs below our revenues during this COVID crisis period, as I say, just to ensure that we weather the storm. Again, touching on my colleagues, I've been very proud because actually, notwithstanding that some of those measures include furloughing staff, voluntary pay reductions for the rest of the staff, those sorts of measures, actually all of them wholeheartedly backed our agent support measures, our discounts and so forth. And I think it speaks volumes for the team we have that they were committed to providing a fair cost portal service during these difficult times.
As the economy unlocks, do you envisage fundamental changes to how the property market works and how the portals serve that market?
Yes, I think it's probably no surprise to many that there may well be an acceleration of technology products and services and the use of technology to work differently, but also in doing so to work more efficiently. We've started to go down that path. We have our OTM Expert, which is our back office website for agent customers, and through that we offer them a range of intelligence, performance, and other tools. We've invested in TechLet, as I mentioned earlier. So, that's been something we have started, but that will be an ongoing focus for us. I think that will be the way markets work. But I think probably more fundamental to that is really that agents themselves are facing a defining moment. They are at the moment making short and long-term portal choices, and certainly we've never seen them so galvanized and possibly so aware that the power is ultimately in their hands. The portals market has lacked competition for many years. It's the reason OnTheMarket entered the market in the first place. But because of that, the agents have seen their portal costs rise dramatically. And we were brought in to try and bring price competition, to bring innovation into the marketplace. I think the very unfortunate COVID crisis could be a catalyst to see change. We are seeing a very vocal agency community arguing that now is the time for change, arguing against a return to what you might call the old normal. We at OnTheMarket have always understood that ultimately the agents have the power. It's their listings, it's their data. They can control who the winners and losers are in the portals market. That has always underpinned our approach to our commitment to fair pricing and our desire to have them as owners in the business. And that remains. And I think actually, with their backing, it could well be that we could see a fundamental change in the portals marketplace.